Top 3 China stocks to buy and watch right now. Now, China is the world's #2 economy and home to dozens of companies that trade in the US. Right now, Canadian Solar, BYD, Tencent Holdings are China stock worth watching or potentially buying. It's been a tough couple of years for Chinese stocks. The COVID pandemic and Beijing's zero-COVID policy have slammed the economy. Meanwhile, regulatory crackdown versus technology and data-centric firms such as Alibaba, Tencent, and NetEase have been a major headwind. The tech crackdown seems to have eased actually. Now, U.S. tensions are a concern. In a recent month, the White House has barred shipment of key chip technology to China, adding to tariffs and other curbs on Chinese goods. Meanwhile, China has rolled back COVID restrictions significantly with an end to lockdown and other severe controls. A massive wave of infection took hold, but investors are looking beyond brighter days ahead. Now, with China New Year holidays out of the way, will the Chinese economy finally rebound? While the current top China stocks to buy or watch are dominated by e-commerce plays, don't forget EV startups such as NIO and Ally Auto, like global giant BYD, all are taking on Tesla in the world's largest EV market. Now, Tencent, NetEase, and search and AI specialist Baidu are other internet giants to follow. The first on our list is Tencent stocks. Now, Tencent is China's messaging and gaming giant with major payment exposure with key holders in an array of Chinese companies, including JD.com. Earnings have declined for the past 4 quarters and revenue for the past 2 as a big crackdown on internet platforms and new mobile games took a toll. Earnings growth is expected to return in 2023. JD.com stock peaked at 94.46 in February 21, tumbling to a 5-year low of 23.52 on October 24, 2022. Since then, shares have doubled, vaulting above moving averages. Shares hit 52.88 on January 27 and have pulled back. On February 17, tech stock fell decisively below the 21-day line, not far from the 50-day and the 10-week lines. Investors could view the recent action as a handle on deep base going back a year. Ideally, Tencent would forge a new base after its big run. Tencent stock is listed in Hong Kong and trades over the counter in the US. And the bottom line here is that Tencent stock is not a buy. BYD. Now, BYD is easily the world's largest EV maker, including full electric battery and electric vehicles and high mileage plug-in hybrids. It still trails Tesla in global BEV sales, but is closing the gap. BYD is China's biggest BEV maker and the world's #2 EV battery maker. On January 30, BYD said full year net profit was 16 billion yuan to 17 billion yuan. That's $2.37 billion to $2.52 billion, up 425% to 458% local currency term. That implies Q4 net profit of 6.7 billion yuan to 7.7 billion yuan, approximately $990 million to $1.1 billion, up 1,013 to 1,179% in local currency. On February 1, BYD reported January sales of 151,341 all-electric BEVs and plug-in hybrids, up 62% versus a year earlier, but down 36% versus December's record 235,197 vehicles. COVID production impacts in late December continue into early January. Meanwhile, the China New Year holiday also impacted output and sales. Productions and deliveries should ramp up strongly. The company is targeting 4 million NEV sales in 2023. Now, the EV giant is moving up price scales for moderate price vehicles. BYD Seal has very similar specs to a Tesla Model 3. When the Seal launched last fall, it was substantially cheaper than the Model 3, but modest BYD price hikes and big Tesla price cuts have narrowed the gaps to $600. Its 90% Denza unit recently launched its D9 minivan starting around $50,000. The Denza unit, 10% owned by Mercedes, will launch an SUV and a crossover in spring 2023. BYD launched its super premium brand on January 5, Yangguan, which means look up, unveiled an off-road SUV and a supercar, both starting at 1 million yuan. That's approximately $145,000. It's possible that the luxury SUV will launch in the 3rd quarter. But BYD is also moving towards launching the Seagull, a small hatchback that will start around $9,000. It's also trimmed the price of its Qin Plus DMI to start just below 100,000 yuan. That is approximately $14,650. The first time it's offered a DMI below that key level. Now, BYD touted big initial orders for the Qin Plus DMI, which is targeting all gas vehicles. BYD is in the midst of a massive global expansion, recently beginning sales in Australia, Singapore, New Zealand, Thailand, Malaysia, and several European countries. Japan, India, Mexico, and Malaysia among new markets in early 2023. BYD is also entering Mexico this year as part of a big push throughout Latin America. Warren Buffett's Berkshire Hathaway, BRKB, has been a long-time major investor in BYD, but Berkshire has sold slices of its H share in BYD in 9 moves, starting in late August. Now, the latest was disclosed on February 9. Berkshire owns about 6% of BYD based on all shares classes, but has pared its stake by more than 40%. The bottom line here is that BYD stock is not a buy. The last but not least is Canadian Solar stock. Now, while technically based in Ontario, Canada, Canadian Solar is largely a Chinese company. It makes and installs solar modules, as well as developing and building solar power plants. Now, Canadian Solar's earnings per share fell in 2019, 2020, and 2021, but were expected to more than double in 2022 with a 68% gain in 2023. EPS rose 494% and 167% in the latest 2 quarters. Now, CSIQ stock hit a 52-week high, 47.69 on August 18, but then tumbled to 27.38 on October 24. Shares vaulted above their 50-day and 200-day line on January 6, breaking a steep downtrend, offering an early entry. Shares kept running for several days before pulling back, forging a handle with a new buy point of 44.17. Now, CSIQ stock has flooded with aggressive entries multiple times in the past few weeks, but has quickly reversed lower. That's a common trend among solar plays. The bottom line here is that CSIQ stocks is not a buy.